Hello, everyone, and welcome to today's webinar, Say Goodbye To. Basically, it's all about how to invest without fear and say goodbye to all the things that you don't like about investing in the market. Things like the time hassles of managing your own money in the market, the negative feelings that you have from losing, missing out, or leaving money on the table, the distrust in your own skills when managing your own money directly in the market, and the uncertainty that comes when the market falls in the short term, rises in the long term. Also, not being profitable in the market over the long term, and the noise which causes you to knee-jerk react and make inconsistent decisions. In order to do that, you need a system or a process in place to help you get the simple things right. The simple things like knowing which stocks to buy, when to sell them, and when to get out of the market altogether in order to accelerate your growth in your portfolio and gain consistency in a repeatable way, regardless of how you prefer to approach the market. On top of that, you need a mental edge, the right mindset to consistently execute your process in the market at all times. We want to help you say goodbye to the emotion, the fear, the uncertainty that so often comes when running your own portfolio. I'll show you how to say goodbye to the hours of endless analysis to focus on the right stocks for larger growth while enjoying dividends along the way, yet still being able to protect against major market crashes. So my name is Shane, and before we delve too deep, I just have to point your attention to our financial services license, which is just to say that what I cover today is more general in nature, rather than me giving you specific advice as to which shares to buy, hold, or sell, and that, of course, past performance is not a guarantee of future performance. All right. So hopefully you're sitting there and asking yourself a few questions. Questions like, what's in this for me? What am I going to gain? Can I trust these people? Why should I follow a strategy at all? And what's this stuff about getting the mindset right? They're all valid questions, and I'm going to do my best to answer these all for you over the next hour or so. And then we'll do question time for anything I don't cover at the end. So feel free to put your questions in the chat box and we can go through them all at the end there. I should mention as well, there's also, for those of you who stay all the way around to the end, there's also a great bonus that we're going to include as part of it as well. Now, we've been here at this for the last 28 years, and what we found is at the end of the day, for you as an investor or a trader, it all comes down to these four main factors that you must consider before doing anything with anyone in regards to your money. And this includes yourself. They are what sort of investments will you have to buy to get the overall performance that you want your portfolio to achieve? And will you be comfortable with the skills that you've got in actually doing so? For example, there's plenty of crypto strategies out there or Forex strategies out there promising the world. Don't get me wrong, some of them have killed it, but they're usually high volatility and high risk. How comfortable are you going to be doing that with a large portion of your money? Will you actually be able to stick to it if you feel nervous or anxious all the time? Or on the other side, money in the bank is pretty safe, isn't it? But the performance is woeful. So you have to buy or invest in something that fits your comfort levels and your risk profile that will actually get you to where you want to be. The next thing you need to consider is sell. Will you be told when to sell? Or will you just get buying tips, leaving you to your own devices and the constant indecision on when you should sell? Anyone can pick a stock or have an opinion. Hardly any of them will come back and actually tell you when to sell it. Protection. Will they try to protect your money from major market crashes? Or do you have to ride all the market ups and downs and just accept big losses at times? I'm sure you don't want to say goodbye to half your money when the market does have those inevitable pullbacks at times. And repeatability. Will the process you follow, be it your own or somebody else's, be simple enough to fit in with your busy schedule and your skill set as an investor? And can you repeat it time and time again, over and over again? Winning a one-time jackpot on a poker machine or having one lucky stock pick, even if it is the next Amazon like so many promise, is hardly going to sustain you well into the future. So you need to consider how repeatable your process is within your lifestyle. So let's start with the buying and overall performance, and we'll use our systemized strategies as a bit of an example. So the two main strategies that people come to us for within our systemized investing program are called SPA3 Investor and SPA3 Trader. For those of you who aren't aware already, SPA stands for Sustained Profit Advantage, and it's been helping investors achieve a better market outcome for the past 28 years now. both SPA3 strategies, I should say, they buy different stocks and focus on different areas of the market, depending on one's risk profile. But both have had great long-term transparent results, not one or two lucky years or one or two lucky trades, but great long-term results. That's why we've got members that have been with us for 20 years who are willing to go on record and share their results. They would have said goodbye to us a long time ago if it didn't work for them. But I want to be open and honest with you. If you're here to make $1 million overnight, our systemized investing approach is not going to do that for you. And if you want someone to do all the hard work for you, this isn't it. However, if you are the type of investor who's looking to learn and really embrace how to become a better investor, one that has a mental edge to become a successful investor long term, with real structure in place to always know what to buy and when to sell, and you don't mind spending 15 minutes a week to manage things yourself after you do the initial training, giving yourself complete control of your portfolio at all times, then stick with me and we'll cover it. Because this is a tried and tested approach that's been working on the market for over 20 years now. So here's what I mean. Okay, so when we talk about performance, SPA3 Trader has been around a lot longer than SPA3 Investor. And we started a public portfolio all the way back on the 25th of January, 2001. It buys across the entire 2,700 stocks on the ASX. Now, the idea of running a public portfolio that showed results in real time came when Gary was invited to enter a trading competition. It was run by Personal Investor magazine back in 2001. It went on to win the year-long competition, and we've just kept it going ever since. In the past 22 years, it's grown from $50,000 to over $645,000. That's growth of 1,290% over that time. I know there's a lot on the charts here, but you can see how it's protected during these big market falls. You can see back here the 54% that are protected against in the GFC, and you can see the flat spot where it got out, and also the 35% fall during the COVID crash there. Whereas SPA3 Investor, on the other hand, and just to point that out, so that's where it currently sits, SPA3 Investor, on the other hand, is a lot younger. It is, when we went about designing SPA3 Investor, we really wanted a system where investors held on to stocks for a longer period than they did with Trader, and also spend less time managing their portfolios. It only buys large cap household name stocks with a couple of mid caps in there. And in 2015, when SPA3 Investor was released, that's when we started this public portfolio that you can see on the chart here, on the screen here, I should say. In its first 7.5 years, it grew 157% or 13.35% compounded per annum. That's a great result for just 15 minutes a week of effort to run it. So you can say goodbye to the hours of staring at your computer screen, managing all your trades. And this is real money live traded in the market for all our members to see up to date every day. Our portfolio is the black line, and the blue line is the ASX 200 accumulation index, which is basically the market itself, the top 200 companies in Australia, with the dividends included in it. So you can see in the COVID crash here, similar to our public portfolio, we protected. We saw a small pullback before going completely into protect mode and moving our money completely to cash. That's what this flat spot that you see in the portfolio is when the market itself fell 35% at the time. Goodbye to worrying about market crashes and what the future might hold. Now, of course, this is the other favorite investing instrument is property, okay, and property's performance. Now, how many of you own investment properties? I can tell you that I do. Nothing wrong with that. There's no rule that says you can't have some money in shares and all your money has to be in profit, or vice versa. You can have both. And of course, many people do. They say the average performance on property is that it doubles every 7 to 10 years, don't they? And that sounds pretty good, doesn't it? Well, how happy would you be if you could have more than doubled your money in the first 4.5 years like SPA3 Investor did, and then it went on to make another 50%, or see it go up by 1,290% like SPA3 Trader has done? You'd have to say that's a pretty good investment, right? That's why our members stick around. So before, when I said you should be asking what's in this for me, after seeing the long-term transparent performance over so many years, hopefully you can answer that question now, right? Okay. Your portfolio won't go up in a perfect straight line, just like ours didn't. And it will, and it won't be perfect, but it will perform over the long term if you get those things that I've just mentioned right. Goodbye to long-term underperforming. Okay, so let's move on selling and protecting. Now, the way we approach the market with a systemized process is known as mechanical investing. This means that the way you achieve your performance and then you protect your profits is by following a really clear and highly researched set of entry and exit signals in a simple process. You'll always know exactly when to buy and precisely when to sell. Nothing happens by accident, and all emotions are left out of it. We want you to be able to say goodbye to second guessing yourself and wondering whether to sell, because that second guessing is just not helping you achieve your investing goals. Because have you ever bought a stock that you read about, or you had a hot tip from a mate that you watched go up, only to hold on way too long when you should have sold, giving back a bunch of the profit, or worse, seen it turn into a big loss? We've all done that, right? It's the worst. In the moment, it's hard to make that decision to sell because we let our emotions get the better of us sometimes, don't we? Especially in stocks that were once great, like these two. Okay. That's why systemized investors use clear, unemotional exit signals, and they have the mental edge to always follow it. They're designed to remove all the guesswork. Signals are designed to remove all the guesswork by telling you exactly when to sell and making your investing life much, much easier. It'll literally tell you when to get out, just like it did on these stocks. You have the signals, they'll always tell you what to do at all times, and you stick to them. That's why it works. You buy, you sell, protect, and then you repeat it over and over and over again. It's a really peaceful way to invest. Goodbye to the nervous nights where you're worried about what will happen on Wall Street while you sleep. Nothing worse than getting up in the next morning if you are worried about it and seeing Wall Street's crashed and you're freaking out about it. Okay, I've definitely been there in those situations before. Okay, now the entry and exit signals are based on technical criteria that we've researched to make sure that your winning trades are much bigger than your losing trades. That's what trading with a positive mathematical edge is all about. And I'll show you a little bit on this when we go through the charts later on, and we actually use the system, and I'll show you how it works. So, when you're trading with a positive mathematical edge, you can always be confident taking the next trade and the one after that, and so on and so forth. Your signals aren't about picking the very top or the very bottom of every trend. They're really about using timing to get you in and buying when a stock's beginning its rise or breaking out, beginning its upward trend, and then you hold on for most of that rise. Eventually, when it starts to turn down or lose momentum, your signals are about getting you out and protecting, missing most of the downwards trend. You sell, and then you protect your money against major losses. I'll show you how it protects more on the charts as we go through everything. Now, to get great long-term performance, you need consistency. Having clear buy and sell signals that remove your emotion give you that consistency always, because you can repeat it. Say goodbye to inconsistency. When getting a tip from a mate or reading some story in the paper, how do you repeat that consistently time and time again for many years? It's impossible, right? So although your mate might have had some good winning tips in the past, and he might be pretty good at it, it's very hard to repeat it consistently over and over again, isn't it? Okay. Now, as well as buy and sell signals, part of protecting your money is about having risk management criteria. So you always know exactly how much to invest in any single stock. Have you ever put too much money in a stock that you thought was good only to see a shock announcement and you get burned? I've spoken to so many people over the years who have had huge allocations in stocks that have been pummeled by bad announcements and they just didn't get out in time. Anyone holding Qantas still? This is starting to hurt if you are still holding it. And even if it does come back, it's fallen 30% already. Even if it does come back, the opportunity cost where your money is doing nothing for you in the meantime, it becomes huge. How long is it going to take to get that money back, that 30% back that it's already lost? Okay. To explain what I mean a little bit further, let's go back in time and check out ANZ here. Okay. Now, let's say, and as I said, I'm going back a few years here. Let's say you had $10,000 in ANZ before the COVID crash. At that time, they were trading about $27 a share. And you took the approach that you don't sell on and protect. You just hold on. Okay. Now, in March 2020, you had to watch your $10,000 turn into $5,500 as it fell 45%. Not much fun, right? And at that time, you're wondering how bad things are going to get. Should you have sold at 20%, 25%, 30%, or did you hold on all the way to that 45% loss? Okay. And is it going to get worse from there? For those of you who have been through it, you'll know what kind of emotional roller coaster this can be. Luckily, though, as we can see on the chart, things did turn around, and 14 months later, it came all the way back to $27 a share. It had been a rough journey with a bunch of sleepless nights along the way, but you're back to where you were. Good job. Or is it? Let's look at it another way. What if back here you had the rules in place to sell ANZ when it started to turn down? Okay, and actually protected your money against the fall. You didn't have to watch the massive fall, and you slept better sitting on your cash while everyone else panicked around you. Okay, at this stage, instead of feeling hopeless in the moment, you're actually feeling pretty good about yourself because you're not going down with the ship. And importantly, you still had your $10,000 to invest down the bottom here when things did start to pick up. So when ANZ started to rise, you had the rules to get you back in and take advantage of the 45% rise that it had afterwards. Okay. Now your $10,000 is worth $14,500. And the journey to get there has actually been much less emotional and much more enjoyable. Okay. You didn't have to go through that emotional roller coaster. $4,500 difference in this case is nothing to sneeze at. But imagine that then being able to repeat that over and over and over again for your lifetime of investing. That's how you get ahead using timing, and you have that right mindset. It's the same time frame, but a different approach. You're viewing it a different way. You're thinking differently to that buy and hold mentality. There's much more money in your pocket, and you've basically just bought, you've sold, you've protected, and you've repeated over and over and over again. And if you can do it consistently, and you have the rules in place, you can just keep repeating it. So goodbye to wasting time waiting for your trades just to get back to break even after a fall. And it's say hello to using your money much more efficiently. Now, we all know that a portfolio won't go up in a perfect straight line, and you are going to have losses along the way. Losses are just part of the game. Not every trade's going to be a huge winner, but it'd be fair to say that you want to minimize the losses and protect your money as much as you can, right? You want to sell before a big loss occurs, like we can see on Newcrest Mining here. Okay, if another GFC or COVID type event comes, and many predicting a crash around the corner, but there's always people predicting a crash around the corner. So take that with a grain of salt. You want to protect your money rather than just following it down like everyone else, right? If it does eventually happen, which there will be a crash sometime in the future, whether it's next week, next year, or 10 years from now, only time will tell. Okay, so our systemized investing approach protects in two ways. The first is on individual stocks, like I've just shown you with the sells on Qantas and ANZ. The second is on the overall market as a whole. Have you ever had that feeling that the market was getting a bit overheated and it might be time to get out and protect? You might be feeling a bit that way now after a really choppy few weeks and all this war going on with Israel and Hamas and other countries getting involved with it. But sometimes it's hard to pick the timing, right? Because if it all resolves itself somehow and things start to pick up, how do you time to get back in? Okay. How much do you let it fall before getting out? So our systemized investing approach has what we call market risk, and it's split into two categories: high market risk and low market risk. These are literally buy and sell signals on the market itself. It's used more so in SPA3 Trader, and it's kind of like a barometer on the overall market and how it's trending. If the market starts to fall, it'll tell you when to get out and move completely to cash, protecting you from the carnage. And the sell signals on individual stocks do that with SPA3 Investor too. And importantly, when the dust is finally settled, it'll give you a clear signal when to get back in and take advantage of the rise that comes afterwards, just like it did in the 2008 that we can see the GFC here. And also what limited losses, like I showed you on the chart before, in March 2020, when we had the COVID crash that occurred. So say goodbye to worrying about future market crashes. Now, I know I said that before, but it's kind of a biggie one, isn't it? Protecting against market crashes. Okay. Now, of course, it's great having this type of performance and the protection against major pullbacks, but you may be asking, how do you do all this for yourself? Is it manageable in your busy life? And are you capable of doing it with your skill set? Will it be something that you can repeat personally over and over and over again? So let's have a look at that. So as I mentioned before, we have two strategies with the Systemized investing program, SPA3 Trader and SPA3 Investor. Now I'm going to focus on the less active, more focused approach of SPA3 Investor here, as that's the one most of our members prefer because it only takes 15 minutes a week to manage, but it's the same process that you go through with both. So SPA3 Investor has been around since 2015, and it's the less active, simpler approach, as I mentioned. It's designed to be focused to give you confidence with investing your nest egg. Now, that doesn't mean that you have to do it with a lot of money. It just means the money that you want to take less risk with. Okay, that might be all your money, or it might be a portion of your money as well. Okay, remember, it's about having a strategy that you're comfortable with that fits in with your tolerance to risk. Okay, your mindset, your comfort levels. So it could be a personal account, a family trust, or a super fund using anything from $10,000 or $20,000 all the way through to $10 million or more. It's a less active, lower risk approach, and that's exactly what we were aiming for when we started researching it, because we already had SPA3 Trader that was a lot more active, that looked at the entire market, the 2,700 stocks. Okay, SPA3 Investor was designed to be all about focus. And by focused, I mean that you get your results by buying into a specific range of 55 large cap stocks and 8 index ETFs rather than the entire market. So how does it work, and why can you be so confident when using it? Well, it all comes down to timing. And to do that, we've designed a unique buy-sell algorithm timing indicator. Now, it's this buy-sell algorithm that tells you what to buy and when to sell. It's that red line that we've already seen on the charts already. And it's an indicator that's unique to us at Share Wealth Systems. It's researched to work best on stocks that have big long trends up and big long trends down. So that's why it's focused on a select few. It's then designed to give you a buy signal when the price breaks out. It's not about trying to catch a falling knife of a stock that's on their way down. We don't want to see you buy a stock thinking that it can't get any lower, only to see it crash another 30%. It's about finding your stocks after they've fallen and beginning to rise again. It's then designed to give you a sell signal when the price begins to fall. Have you ever held on to a stock way longer than you should have and didn't sell it? Then you've kicked yourself for not getting out sooner. We've all done it, right? And there's nothing worse than doing that. Okay. So the idea is to say goodbye to ever doing that again. Very clear signals will help you do that. It's not about getting in at the very top or getting out at getting out at the very top or getting in at the very bottom. It's about getting in and taking advantage of most of the rise and then getting out and protecting it against most of the fall. Here's what it looks like on some charts. So this is James Hardie. Now on James Hardie, we can see here's our little buy signal. Okay, we've got an upwards trend, and on this little pullback here, we got the buy signal after the breakout that occurred there. Okay, now it had a really good run up, and then there was a sell signal at the top here. Now, a little bit on the journey here. So we get this buy signal, we go in to buy it the next day. Now, the red line is our buy-sell algorithm. Now, the whole idea of this is about when we get into a trade, it's breaking out. So we're hoping for the best. They're not all going to go off and make a 42% winning trade, but we hope for the best. But we've got to protect against the worst, because anything can happen in the market. And we've got to have the mindset that if this trade goes against us, we're willing to accept a small loss. A small loss, or I should say all large losses start with a small loss. So we want to cut it off if a small loss occurs. So here we got the buy signal, and it went up and it started to drop. And you can see here, if it had fallen below the red line, and we were in loss territory at that stage, had it fallen below and closed below that red line, we would have gotten out. We would have accepted a small loss, because we can accept small losses. What we can't accept are 30, 40, 50% losing trades. Okay. So we have that mindset. We'll accept a small loss, and we consider it a win or a victory against a large loss occurring. Okay, so we didn't cut the loss. It ended up missing the sell. It didn't fall below the red line, and then it kicked off and away it went. So we're protecting against the worst. We're planning and hoping for the best. And in this case, as you can see, as the price rises, it never gets below the day you get into it. So it's flat along here. And then as the price rises, it follows it along. It ratchets up with the price there. Then eventually, as it started to fall, got a little bit wobbly at the top, it started to fall, we get a sell. And that was back in September. So while it's falling here, you don't want to be in it. Take that money out and put it into something else that's growing. Get your money working harder for you and more efficiently for you there. Okay. And I'll show you some buy signals in a moment. Okay. If we go back a little bit on James Hardie, we can see the past signals as well. And that's an advantage. You know, when we've got the past signals, we can back test and we can simulate and see what the system would do following the rules of it as well, on top of having our live portfolio. So here we can see that trade that we had. We can also see that we had a nice big juicy winning trade up here, and then the sell signal before when things started to dip, we get out of it and we protect from the majority of the fall here. Okay. We also want to protect against false breakouts. So there's some extra criteria that stops us getting in on these bounces that we introduced not too long ago as well. Okay. So that's why didn't get in on the breakout here. There was a little bit of a pullback beforehand. And the idea is to prevent getting in on these false breakouts in a downwards trending market. Okay. It's a stock filter that we've got in there. For those of you who want to learn the technical analysis, who are interested in that side of things, it is based on an ATR trailing stop and breakout system with swing trading built in, plus some other stock filters as well. Okay. For those of you, as I said, want to learn more, happy to delve into that on a one-on-one basis, but we're going to stick away from the real technical criteria today. Okay. So having buy and sell signals is great, but that's only part of it. As we said, it's process and mindset. How do you run your process as a portfolio of stocks? And can you repeat it? Well, the process with SPA3 Investor and the strategy of our systemized process when running it as a portfolio is to hold 9 stocks at any given time. And on average, each trade lasts for about 4 or 5 months. Now, when you get a buy signal, you buy on a first come, first serve basis. So Fortescue Metal is the first stock that gives you a buy, then you buy it. If Westpac is next, then you buy that until all 9 stocks in your portfolio are filled. Then you simply hold on until a sell signal occurs. The idea is to keep things super simple. And because they're all large stocks, you can invest the same amount of money in each trade. So for instance, if you had a portfolio of $90,000, each stock would have $10,000 in it. If you had, say, $45,000, each stock would have $5,000 in it. And it's fine for larger portfolios to hold more positions. It's just that 9 is a great risk to reward to effort ratio. So you can say goodbye to the days of holding 30, 40, 50 stocks in your portfolio and then trying to manage them all effectively. Now, when you begin, it's not about jumping in head first day one and buying all 9. It's about easing into it, entering the market confidently and carefully, just not jumping in just for the sake of it. Okay. We always suggest, even if you've got quite a large portfolio, you start small, you build the skills, you learn the process, you train the mind, and you get that mental edge to execute your trades perfectly on a small amount of money. And then you add more money as you're going along. This is not a 3-month, 6-month journey. It's ideally a multi-year, multi-decade journey that you're going on. So we want to learn all those right steps and really instill them into you. Okay. Now I've been mentioning, I showed you the results on the ASX portfolio. And we also have one for the US market as well. There's 32 ETFs and 65 stocks on the US that we track. Now, there are 2 ways to get your buy and sell alerts. The first is with the Share Wealth Systems app, and the second is by doing it on your PC. I'll show you both. Okay, so on the app, at about 8 p.m. each night, you'll get a notification on your phone alerting you if there are any buys or sells. So you open it up and it looks like this. As you can see, on October 4th, both Monadelphous and Macquarie, down the bottom here, gave us sell signals. Okay, so at that time, if you're holding on to either of those in your portfolio, you would have gone into the market on Thursday the 5th and sold them off. Okay, now these are actual signals that the system gave at the time. These are real signals. They're not made up. Okay. Now, the next day on October 5th, Rio came up as a buy. So with the money that you had left over from selling one of those other two, you go into the market and you buy Rio. Then a few days later on the 10th, if you've sold both of those, then you would have gone in and bought car sales. Okay. There's no emotion. There's no second guessing. You just go in and sell and you move on to the next trade. So can you see how investing becomes nice and simple when the buys and sells are literally sent to you? Yeah. Takes away all the confusion because you always know what to do. The system is finding the stocks for you. You're buying, you're selling, you're protecting, and you're repeating it. And you're saying goodbye to knee-jerk reactions and decisions based on the news of the week. Okay. You don't have to read the paper anymore. You don't have to jump online and analyze stocks anymore. Okay. The system does that work for you. So there's no more knee-jerk reactions. Okay. So the great thing as well is even if there's nothing to do, you still get a notification to tell you that there's no new signals today. That way you're always, or you're never stuck guessing on, on what your action should be at any given time. You're always completely aware, completely in control, and completely confident in all your decisions. This helps you develop your mental edge in the market. It's great for you also, of those of you who don't have much time, and the process is so easy that anyone can do it regardless of their experience. And as well as that, the reward to effort ratio with SPA3 Investor is fantastic, like I said a moment ago. What I mean by that is the results have been brilliant. You don't need to spend a lot of time to achieve them. You might do, say, 2 to 3 trades per month on average overall. So 20, 25 trades per year on average. Now, as I mentioned, the second way of getting your signals is by running a scan on your PC, which is what I'm going to show you now. But I should mention, this is the exact process that we follow to run our real money portfolios too. We don't make things up. We don't show you different things. This is what we do with our portfolio. And it's also the same process that we run with SPA3 Trader, just that the trades with Trader are much more frequent, being a shorter term system. And the money management rules are more stringent because you're trading from the small end of the market all the way through to the large end of the market as well. Okay, so let's jump in and have a look at the process when doing it on your computer. Now, on your computer, you would have our Beyond Charts software. Now, Beyond Charts is a full-blown technical analysis package, and it's split into 2 parts. One is there is the technical analysis package where you can look at the charts and run your scans and see all your buy and sell signals. The other part is the portfolio manager, where it keeps track of all your trades, where you set in the rules for your portfolio when you first start off and tell it how much you're trading with. So let's start with the portfolio manager here. We're going to click on that. So when you first start off, you click on new portfolio and you would tell it, you would give it a name. So we'll call it Shane. All right. Then you would give it a start date. So let's say we started this portfolio a month ago, and we started it with $50,000. Well, let's go with $90,000. Okay, so really easy setting in these rules as you're going along. Okay, now part of the mindset training and getting that mental edge is having the right exercise. So you'll see I unticked the 25 trades exercise here, but one of the things we help you with when you first start off is recording your first 25 trades, how you're feeling at the time, what are your thoughts on the market? Because we want to help you change your habits. There's a lot of dysfunctional habits, which I'll talk about in a moment, that come into it, which aren't necessarily the beliefs that we have today and that get us through everyday life don't really work in the market. So we help you to train your mind in a way that does help with the market itself. So that's what I've ticked off here. But really, in terms of process, you set up a portfolio with the amount of money that you're using and you give it a name, and you can run as many different portfolios as you like within the system as well. Okay, so here we're running 9 positions for our $90,000. And we're going to put in the brokerage cost of $9.50, which is self-wealth, $9.50 flat rate, nice and easy. Okay, so now your portfolio is set up and your rules are in place. So when you're buying, there are 3 steps to buying. Step 1 is to run your scan. Now on your scan, you simply open it up and you click Start Scan. Now the buys are going to be exactly the same buys that you got on the app. So if you prefer to run your portfolio from the app, great, you can do that. If you prefer to run your portfolio on the computer because you like to look at the charts and see the detailed stats, by all means, you can do that. You'll have both there for you all the time as well. Okay, now I ran the scan over the last 9 days because with this choppy market, we haven't had heaps and heaps of buy signals, but we've got a few here if we go back over the 9 trading days. Okay, so we can see on the 10th, we had car sales come up. On the 11th, we had Domino's. The 12th, we have Breville and Super Retail Group. Okay, now at this point, we can go in and we can have a look at a chart, and we can just click on that and it'll bring up a chart. And here we can see this is car sales, okay, which we also saw was on the app before, didn't we? That was the screenshot that I had of that buy signal on the 10th, okay? So that's the app working. Now, here as well, okay, so we've run the scan. Now, as I said, when buying, there's 3 steps. Step 1, run your scan, 1-click scan. Step 2 is to act on the scan results. So what we do is we click on this little running person and you click on trade. Now, what this is going to do, it's going to bring up a little trade ticket for you, and it's going to calculate based on your portfolio how much money to put into the trade. Now, I've got a couple of screens going here, so if I'm looking back and forth, that's why. Okay, so here we can see that we've got car sales, the security. It'll literally tell you how much to buy. So at this point, it will tell you to go in and buy 340 shares of car sales at $29.38 each or thereabouts, taking your brokerage costs of $9.50 out for a trade value of $9,998.70. Okay, so it's telling you what to buy, it's telling you when to buy, it's telling you how much to buy based on your portfolio. And as your portfolio grows, it will recalculate the positions. So the next trade after this, if your portfolio has grown to $100,000 at that time, the next trade will be around $11,100, 1/9 of 100, and it'll automatically calculate that. So from here, you go into the market and you would buy it. Now, if you get there and the price has changed, let's say it's at $29.99, you might spend a little bit more if you've got the cash in your portfolio. You might reduce the trades. If it's down at $27.90, you might get a few more shares for your money there as well. And you could change that up to 360 shares or 350 shares. So you've got some flexibility there, but the idea is to buy around 1/9 of your portfolio, and the system's going to calculate that for you. Then you hit save, and from that point on, it's going to track it for you. Okay. So what I mean by that is in your portfolio manager, you can come in here, you can click on positions, and you'll actually be able to see car sales in here. Like you'll be able to see all 9 of your positions when you get to that point. We can see car sales, we can see the current quantity, the capital allocated, the price that we paid, the move yesterday, and our profit. So if we bought it at that price, we're up $151 or 1.55% all up there. Okay, now, as well as that, we like stats, okay? So with the stats, if you want to see the stats on these stocks, okay, and I talked about trading with a positive mathematical edge. If you like to see the stats, by all means, you can come in here and click on the signal summary. Now, you might have watched some of our YouTube videos where we cover this as well, the trades that we take in our portfolio, and I'll go through the statistics on the trade. So we can see here with car sales, we can see the win rate. So the win rate on car sales over the last 10 years, which is the history we're looking at in particular, and we can go back through that history and see all the signals if we wanted to, but the win rate is 68.75%. Okay, so we know that almost 7 out of 10 trades are winners when we buy car sales. So that's pretty good, right? That gives you confidence knowing that, yes, I may have a losing trade, but the odds are stacked in my favor when I buy car sales, okay? Now, we also know that our payoff ratio is 2.46 times. So what that means is when we win, our profits are 2.46 times the size of our losers. So here we can see that the average profit trade, 7 out of 10 times, is 11.49% on car sales. The average loss trade is less than 5% at 4.67%. Okay, so we win 7 out of 10 times, and our profits are almost 2.5 times larger than our losses. That's trading with a positive edge, a positive mathematical expectancy. Okay, you're not doing research on car sales. You're not going through their balance sheets. You're not looking at their management to do all this. You're getting a buy, and you're buying, and you know you've got that edge behind you. It's a statistical edge. Okay, as well as, again, we're going to have the mental edge as well, but that helps when you've got a statistical edge. It helps much more to develop that mental edge or the mindset as well. And that's not just one fluke trade. We can look at the others in the portfolio. Here, if we go to Domino's, we could do the same thing, and we can look at the stats. And we can see that the stats on Domino's, I did a video on this last week that'll come out. We have a win rate of 73.68%. The profits are 24% on average, and the losses are 8%. Okay, you get the idea. Yeah, and it's the same when we look at some of these other trades as well. Breville Group, yeah, our win rate here is slightly less at 53%, but our profits are 2.59 times larger than our losses. Okay, you get the idea as well. Okay, now, as well as the buys, okay, you got to look for sells. And the way you look for sells is exactly the same way you look for buys. We saw those sells on Monadelphous and Macquarie Group in the app, but also you can have your scan set up to run for sells. You just click start, look for sells there, and exit signals. Okay, and that's it. Process-wise, it's nice and simple. Now, Beyond Charts is a full-blown technical analysis package. You can run simulations, you can write your own formulas, you can backtest your ideas. There's all sorts of different stuff. You can draw trend lines on a chart. Not that that's an actual trend line, but you get the idea. Plus, as well, there's all these different indicators. If you want to put a Bollinger Band on your chart, you can do that, or whatever you like. You can have your chart set up a specific way that you like to have it as well. Okay, but that's the idea, is running your portfolio, being very systematic in your process, and having that statistical positive edge behind you. Okay, it's pretty simple. You run a scan, tells you what to buy, it tells you how much to buy, you buy it, then you hold on to it. Okay, you think about it on the day you get in. Every other day in between, you don't have to think about it, because the system's analyzing it for you every day. And then eventually, on average, about 4 or 5 months later, it's going to give you a sell signal there. Okay, so that's the process. Yeah, that's what it's all about. We've covered the buys, we've covered the sells, we've covered how it protects your money, and we've also covered the repeatable process that has resulted in a great performance. And as I've said, it's all about the process and the mindset. I can't stress that enough. It's great having a process, but it's just important to have the mindset. Okay, so the process is trading with a statistical edge, and the mindset is trading with a mental edge. You know, we want you to become a successful investor with strategies that you can use for the rest of your life. So we provide everything you need to become a successful investor in the market for the long term. So do you mind if I take a few minutes and show you how we help you in both areas of both process and the mindset? Hopefully you're getting a bit of an idea of that already. Okay, so firstly, we teach you the process, and we get you right up to speed within the first few days. Yeah, that's how simple we've made it. You can see how simple it is by what we've been going through. Yeah, if anyone was to develop a process like this on their own, it'd take them years to research it, to design it, and then fine tune it. You know, that's years to actually get to a point where you could actually be confident in trading it. We help you fast track that process and cut out all those years of trial and error. You know, it's a process that's got a positive expected outcome over the long term, as demonstrated through the ongoing profitability for more than 7.5 years of trading since the 1st of January 2016 on both the Aussie and the US markets. You know, we also spent 6 years researching a whole range of technical analysis concepts before we even released it to our members. And over the last 18 months, we actually went through another process of research just to make the system better, to help reduce drawdown more, to help get away from those false breakouts that I showed you on James Hardy and things like that. The research involves thorough backtesting of individual stocks and also whole portfolio simulation over more than 20 years of historical data. Yeah, it was no small feat. And we continue that research on an ongoing basis, always improving it for the benefit of our members. We'll also use the process to help you attain the type of mindset that Mark Douglas, probably the world's best trading psychology coach, discusses in his quote. Okay, now this is a pretty important quote, I guess, especially when we're starting to talk about mindset. And you can only attain a mindset like this if you have the right process in place. Because if you're doing it haphazardly, you're getting tips from other places, and you don't have a process, you can't achieve a consistent mindset. The quote is from page 7: the defining characteristic that separates the consistent winners from everyone else is the winners have attained a mindset, a unique set of attitudes that allows them to remain disciplined, focused, and above all, confident in spite of adverse market conditions. Let me reiterate that again. Let me cover that last bit again. Remain disciplined, focused, and above all, confident in spite of the adverse market conditions. Most active investors and traders never acquire the necessary mindset skills. Many of these skills take years, even decades to develop. Now, we're such big believers that this training is critical for anyone, really critical for anyone who wants to be successful in the market long term, that we're going to make a 4-week promise to you. Basically, within 4 weeks, we'll get you 90% of the way to the type of mindset that Mark talks about in Trading in the Zone, his book, or you don't pay. Okay. If you're not satisfied with the mindset training and the coaching that we'll take you through, you'll get 100% of your money back at the end of the 4 weeks. So allow me to explain this. Now, I'm going to go a little deep here into the mindset, but to be successful in the mindset in the market consistently over decades, there are a number of poor thinking trades, conflicting decision-making criteria and counterproductive habits that a typical human being needs to say goodbye to and let go of. Okay, we alluded to some of this in the emails as well before the webinar. These existing process and mindset habits are tested the most when the market suffers adverse market conditions or negative market conditions, and we lose money. We all hate to lose, don't we? So that's when we're tested the most. When the market's rising and you're making money, everything is simple and easy. So your mindset hardly gets tested during those times. Of course, it doesn't get tested because life is good when you're winning, isn't it? Those sort of feelings and the big test that comes with them in the tougher market conditions is obviously it's psychological in nature. We feel emotional pain when we lose. That's just the way we're programmed as human beings. There's no physicality in the stock market, only what we think. It's only what's between our two ears, isn't it? The problem is very few investors, very few of them work on their trading psychology, mainly because they either don't know how to or they don't realize the importance in doing so and how much it's actually costing them. Not going there and working and not working on your trading psychology due to our current belief is often due to our current beliefs defending themselves. These are beliefs that we do need, in everyday life, to get through everyday life, things we're programmed with. But those same beliefs, as I said before, they're often dysfunctional when it comes to what we need to achieve in the market, which makes it tricky, I know. So when those beliefs don't work for us, what we do is we default to analyze more, or we research away the emotional pain that we feel from losing or from making big mistakes. We say things like, next time I've got to also look at this piece of fundamental information, or I also have to apply this indicator. And that's why it ended up being a loser. Okay. Because we don't realize it's the psychology. We think it's our analysis, that we did something wrong in the process, the analysis. Okay. But if your only tool is a hammer, then every problem looks like a nail, okay? And if more analysis doesn't work, which it won't, we give up and we actually remove ourselves from the environment that causes us that psychological or that emotional pain. And thereby we remove ourselves from the very environment that provides the profits and the opportunities. Kind of counterintuitive. We give up. Okay. And that's all because our weakness is the psychological strength and the attitude that we need to handle the adversity in the stock market. We're simply not born with the mental edge to handle it. So we've got to learn it. There are investors who always endure and they come out of periods of adversity peacefully and confident. It's not because they didn't lose during those conditions. It's because of how their mindset handled the losing. they still lose. They can just handle it better. They've accepted it more as well. You have to lose in the short term to win over the long term. As we saw in our trades, 7 out of 10 are winners, 5.5 out of 10 are winners. We've got to accept those small losing trades in order to see out the edge and to see it play out. Winners in the market are people who never allow, or winners overall are people who never allow losing to stop them. Winners see losing as the motivation for more growth. They have a mental edge because they've worked on it. To attain that mindset that Mark talks of, there are attitudes that we simply all have to get rid of and say goodbye to. And there are other attitudes that we may not be aware of that we have to say hello to. Again, that takes time. And the reason for that is so we can be consistent, we can remain disciplined, focused, and confident in spite of the adverse or negative conditions. The process and mindset training and coaching that we provide is called the Systemized Investing Program, or TSIP, as we coin it here in the office. In this program, you'll attain 90% of the attitudes that Mark talks about. We recognize that we're all human and we're never going to reach 100% perfection, okay? So we're going to help you achieve 90% of that. Thereafter, for as long as you remain as a member with Sharewell Systems, we'll help you to continue to work on and fine-tune your mindset, and we're going to help you do that along the way, and we're going to be there with you to do so, okay? We're not going to say, off you go, we hope you do all the best, we're never around. We're here to help you through that. Just as we're also going to help you fine-tune, and we're going to keep fine-tuning the process for you. As I said, we're always here trying to make it better for our members. And we do this because Gary and others in the office, including myself, we use the same process to manage our own money, meaning we live the same active investing journey that you'll be living after the training. You're not going it alone. So we're always working on our process and our mindset for ourselves as well as for our customers, okay? Again, we're on the same journey as you. Gary's a big believer that no skill stands still. It's either you're going forwards or you're going backwards. Two of his portfolios, one on the ASX that I showed you before, and one on the US on the public record, and they follow the exact same process that you'll learn for your own portfolio as well. As I said, we don't do anything different with our portfolios. We follow the exact same process that I've just shown you with our portfolios. That's how we get those results. In the process and the program, you'll say goodbye to the kind of attitudes that are dysfunctional with respect to active investing in the market. We've been knocking them off as we've been going through today, saying goodbye to things like the negative feelings of losing, making mistakes, missing out, or leaving money on the table. The frustration with the market when it doesn't rise for many months or even years. The market's been going sideways for a while. It's inevitably going to break out, but it's been a frustrating time during the last year and a half to 2 years with these false breakouts occurring. It will eventually break out one day, and it will have another crash sometime as well. Okay, so we've got to be prepared, and we want to say goodbye to the negative feelings that we have around that and just accept that's what the market's going to do. Okay, and we've also got to say goodbye to the distrusts of your own skills in managing your own money directly in the market, and the doubt in the market, how often it needs to fall in the short term, or how often stocks need to be losers in the short term for your portfolio to rise in the long term. You're also going to say goodbye to the dabbler habits that cause inconsistency and irritation. I'm a dabbler in the market. Okay. If that's the case, you're not taking a professional approach with your portfolio, which is what we want to help you to do. Okay. We also want to help you say goodbye to the fatigue that comes from chasing different parts of the market. This month I'm doing crypto. This month I'm doing option. This month it's ETEs. This month it's doing stock. Okay. But then you're always too late. Crypto goes up. So now I'm going to jump in, and then everything falls because you're always too late to the party. It's tiring going through all of that. So we want to say goodbye to that. Okay. Also, the despair, listening to the negative noise, the media of opinions and events that occur, which, when those things occur, they cause you to try and predict the future. And because of that, you make rash decisions. Oh, things are starting to fall. I'm going to get out. There's a war coming. I'm going to get out, when in fact the market rises, or oil price rises because there's a war and the supply is lessened as well. Okay. There are ways to play it if you've got a mechanical process that guides you to the areas of the market that are moving at any given time. And also, We want to help you say goodbye to the feeling that you were betrayed by the market, by an event that you had no control over anyway, causing you to sell at a loss. You can't control what the market does. So you've got to stop trying to control it and accept it for what it is, and then have a process within it that allows you to take advantage of what the market does as well, not what we think it should do. Okay. Now, there's only one high probability way that any trader can energize these new habits that we're talking about and de-energize the old dysfunctional habits in accordance with what they really desire to achieve in the market. And it's not by becoming a better fundamental or technical analyst. And it's not by researching, reading, or analyzing more for every single trading decision that you make. It's this, which we've already talked about. It's the combination of the kind of mindset and the way of thinking that Mark Douglas coaches in his book, Trading in the Zone. And the second is an objective mechanical process that has a positive expected outcome over lots of completed events. Now, it doesn't happen on one or two trades. It's got to happen over lots of trades for that expected outcome and the statistics and the edge to play out. Okay, we'll take you through a set of investing drills that are going to instill new habits at a functional mindset level in your investing routine, while de-energizing, getting rid of those old dysfunctional habits. As Mark Douglas states in Trading in the Zone on page 172, the first stage is the mechanical stage. In this stage, you build the self-trust necessary to operate in an unlimited environment. The market's an unlimited environment with so many different variables. You learn how to flawlessly execute a trading system. You learn how to train your mind to think in probabilities, which is the 5 fundamental truths which Mark talks about. And we're going to cover these things in the program. Okay. And you also create a strong, unshakable belief in your consistency as a trader. The 4-week program involves intense training techniques that will almost definitely challenge what you believe about the markets and about your trading self. The mechanical stage of trading is specifically designed to build the kind of trading skills, the trust, the confidence, and thinking in probabilities that will virtually compel you to create consistent results. If you get all of those right, you can't help be consistent in the market. And the sole purpose of trading mechanically is to transform yourself into a consistently successful trader. Okay, you want to get consistency there, and you want to be consistently successful over the long term. So to do this, we've rearranged our technology, our tools, our training techniques, and our business processes to be able to take a group of investors through this intensely focused training schedule. We'll unpack Mark Douglas's mindset concepts and coaching material in a lot of detail during it. You'll do the drills and the training that aren't covered in Mark's books, but are similar to what he used in his weekend workshops as well. So you won't just get it from reading Trading in the Zone. We're going to go deeper than that because we've done Mark's trading workshops. He came along to our retreat for our members back in Hamilton Island many years ago as well. And we're going to be your accountability buddy and your coach to ensure that the highest probability of you acquiring this mindset, the necessary skills to give you that mental edge. And we truly believe that we are uniquely placed to be able to transform your active investing habits, your mindset, and hence the outcomes for a number of reasons. Okay, there's 4 main reasons that we really think, actually, so the reasons that we believe this is, we have a verifiable mechanical process that's been live traded 100% mechanical in the public domain for over 7 years. I've just shown you our public portfolios, as well as research for 6 years before we even started it. We've also been researching the markets and fine-tuning mechanical systems for the stock market for 28 years and trading them alongside our customers for over 20 years since 1998. Okay, Gary Stone was a personal friend of Mark for 11 years when they first met back in 2004. Mark was Gary's trading mentor from 2002 and continues to be today, even though he's not around anymore. Okay, Sharewell Systems has been a stock market education business for over 28 years, since June 1995. We've slowly but surely learned how to best be your accountability buddy to instill what you actually need to learn. and there's actually 6 points. I forgot that we added a couple more. We've also developed a homegrown portfolio manager and technical analysis software package that's focused on managing mechanical system stock portfolios for the ASX and US markets. And we've developed the software tools, the scans, the app, and whatever's needed to simplify and make the process as efficient as possible. So if you're ready to forever attain the necessary knowledge and skills to take your active investing to the next level, then this just may be the program that you've been waiting for. All right, thanks very much for joining today's webinar. We hope to be of service. And until next time, when I show you around the markets again, wish you consistent and objective trading. All right, thanks. Bye for now.